After watching this video, you will never think of your hearing aid insurance coverage the same way ever again. Hey guys, Cliff Olson, Doctor of Audiology and founder of Applied Hearing Solutions in Phoenix, Arizona, and in this video, I'm shining a light on the scam of hearing aid insurance. Okay, so let me start off this video by disclosing that I hate health insurance. And I don't just hate your insurance, I hate my insurance as well. I hate that my insurance premiums are darn near $600 a month as a healthy individual, and I hate the fact that I have to spend $10,000 towards my deductible before my insurance ever pays a thing. And even by some miracle that I meet my deductible, which would probably require a vehicle accident or a diagnosis of cancer, my insurance would probably still find a way to deny me coverage. But enough about me ranting about my crappy insurance, let's talk about your crappy insurance when it comes to hearing aids. You know what? Health insurance, especially for hearing aids, never used to be this bad. And yes, despite Medicare not covering hearing aids, a lot of commercial insurance plans did cover hearing aids. You used to have a reasonable monthly premium with a relatively low deductible, and then your hearing aids and hearing aid related services would be covered by your health insurance at around 70 to 100% with an in-network provider. Or you could even go to an out-of-network provider that you preferred more and still have your insurance company pay for around 50 to 60% of your hearing aids and services. This was also better for your hearing care professional because your professional could select the most appropriate hearing aids for you, and they would be reimbursed at a rate that would allow them to spend enough time with you to provide best practice audiologic care. Of course, someone's always got to ruin it for everybody. Like the father and son duo, Terry and Rocky Anderson from Anderson Optical and Hearing in Texas, who scammed Blue Cross Blue Shield by offering American Airlines employees a free pair of high-end sunglasses or eyeglasses for taking a free hearing test. Then, of course, turning around and billing Blue Cross Blue Shield for hearing aids that at the time had no maximum limit on the cost of hearing aids, and the benefit could be used once a year. Some of these patients didn't even have a hearing loss. Then $16.7 million, 2 guilty verdicts, and prison sentences later, this Blue Cross Blue Shield benefit no longer exists for American Airlines employees. But to be honest, the insurance problem started long before the Andersons were convicted of insurance fraud. You see, around the late 2000s and early 2010s, insurance companies started contracting with third-party administrators, also known as TPAs. Now, I will not specify any particular names of these third-party administrators because, trust me, these are the exact type of companies that would sue me for telling you this information. That being said, if you appreciate me taking the risk of even making a video like this, do me a huge favor, click the like button because it really helps out the channel, and make sure that you're subscribed to the channel with notifications turned on so you never miss a newly released video. Okay, so the purpose of these TPAs was to lower the cost of hearing aid coverage for the insurance companies. They essentially act as a middleman between the insurance company and your hearing care professional to administer your hearing aid benefits. Now, some insurance companies that did not have a hearing aid benefit could contract with these third-party administrators as well to offer hearing aids as a part of their insurance plan as a value-added benefit. This would potentially entice new members to select their insurance plan versus a different insurance plan. Members of these insurance companies who needed hearing aids had to go through one of the providers who were in network with the TPA. They had to get hearing aids that were allowed by the TPA and could only receive services that were allowed by the TPA. Members would also usually have to pay an additional out-of-pocket fee to the third-party administrator if they wanted to get hearing aids that were any better than entry-level devices. The hearing care providers who were in network with the TPAs were reimbursed anywhere between $200 and $500 to perform a hearing aid fitting, which is well below the standard market rate for those services, and provides some level of limited services for a predetermined amount of time. Many of these TPAs would also limit the hearing care professional on what they could charge you after the predetermined amount of service time is expired. Now, on the surface, this could absolutely look like a terrific deal, and that's kind of the point. I mean, some insurance plans that didn't ever have any hearing aid coverage now had at least some level of hearing aid discount through a TPA. And it would appear that some of the out-of-pocket expenses for members would also be limited under one of these TPAs. However, this is when we get into the scammy part. First of all, many TPAs limit which hearing aids you can get. If you want an Oticon hearing aid, but your TPA doesn't offer Oticon devices, or you want a Phonak hearing aid, or a Signia hearing aid, or a Resound hearing aid, or a Widex hearing aid, and whatever TPA you have doesn't offer any of those devices, then you're not getting one of those hearing aids. Now, don't tell anyone I actually told you this, but some of these TPAs are actually owned by hearing aid manufacturers. And if your TPA is owned by a hearing aid manufacturer, guess which hearing aids you're gonna get? So instead of your hearing care professional selecting the hearing aid that is actually best for you, they're just going to have to select the hearing aid that your TPA offers. Second, you have limitations on who you can actually see professionally. If your preferred local hearing care professional is not in network with your TPA, then you cannot go to them on an out-of-network basis because your TPA refuses to do any out-of-network reimbursement. This means that you may be forced to find a different provider in your area or travel long distances just to find a provider who's in your TPA network. I've even had people reach out to me and tell me that they had to travel to completely different states just to find a provider who was in network with their third-party administrator because every provider in their local area dropped the third-party contract. Third is that there are often hidden fees using these third parties. Despite TPAs advertising low-cost or discount hearing aids, almost nobody really wants the low-end entry-level hearing aids. But don't worry, just kick in a few extra $1,000 and you can get yourself a better hearing aid from your TPA. Of course, that money does not go to your hearing care professional or even the manufacturer, it goes to the TPA. In fact, when I first started my clinic, I was in network with several different TPAs, and individuals would often have to kick in up to $5,000 to upgrade their hearing aid technology, which meant that they were actually spending more money on hearing aids with one of these TPA discount programs than they would have spent with their traditional insurance coverage, even if they went to an out-of-network provider. And these TPAs conveniently leave out the fact that you're probably going to have additional service costs as time goes by. And you'll likely have to pay even more if you want to go to a hearing care professional to provide best practice audiologic care for you. Over time, this can end up costing you substantially more money than if you were to just purchase your hearing aids privately from a local clinic and foregoing your TPA discount. And fourth, the quality of care that you typically receive from an in-network provider with your TPA is often much lower because they cut corners due to such low reimbursement. In some cases, when you compare it to traditional hearing aid insurance coverage, these providers are accepting 10% of what they would normally be reimbursed. Now, I don't know about you, but if your employer told you that they would only pay you 10% of your salary, do you think that you would end up giving them your full amount of effort when it came to doing your job? If you would, then you would make a fantastic in-network TPA provider. Perhaps this is why more and more high-quality providers who hold themselves to a best practice standard are leaving these networks. In fact, if high-quality care is truly what's important to you and you're willing to look past your TPA discount, which as you can see isn't really much of a discount at all, then I highly recommend you check out my website hearingup.com and finding a Hearing Up Network member in your area. Hearing Up members have been carefully vetted and are committed to delivering top-tier best practice audiologic care. And because of that commitment, most of them do not participate in these third-party administrator networks. But if your priority is to hear your absolute best, instead of just trying to stay in network with your TPA, then connecting with a Hearing Up provider in your area is one of the best decisions you could ever make. At the end of the day, when you look at how third-party administrators are increasing the cost of hearing aids compared to traditional hearing aid coverage, and how they're limiting your access to the best hearing aid technology and the best hearing care professionals, you can start to see how I think hearing aid insurance is becoming a scam. All that being said, you might be totally okay with that. But the question you gotta ask yourself is, are you okay with your insurance dictating the quality of your care when their number one goal is to reduce the amount of money that they have to pay out from their program? Or, hear me out here, do you want to take your hearing healthcare into your own hands and make decisions that are not being influenced by your hearing aid insurance? Either way, your decision does not affect me, but it will definitely affect you.